If you could give one financial habit or tell one financial habit which each Pakistani or every Pakistani should have, what would be?
Save early, save small, save regularly. Don't really go into that trap that saving and investing is for the rich. Actually invest and save to get rich. And I've seen a lot of those stories where you can see people changing their lifestyle or going to a higher strata of living just because they saved and invested at the right time.
Welcome to Money Curve on Dawn News English. I'm Bilal Moon, and today we have a very special guest with us to talk about investing in Pakistan. He's the CEO of the largest asset management company in Pakistan, who manages over 660 billion rupees in assets. Welcome and Assalamu alaikum, Imtiaz. Thank you for coming.
Islam. Thank you so much, Bilal, for inviting.
PSX is making a record high day by day. I'm sure you must be enjoying your job as the CEO right now.
So yeah, it's always good. Obviously, the bull markets are usually easier to explain, easier to manage. But yes, it's always, you have to look at the bigger picture and everything combined. But yes, given a choice, one would definitely want the markets to be healthier rather than go through a bear run.
And so before getting into the details of the market and why it's performing and your outlook for 2026, let's start off with, why should a Pakistani invest into the stock market, or why should he generally invest rather than saving cash?
So I think saving is only half the job. So when you're planning your future, yes, saving is very important. But it's also equally important to make sure that that saving does not lie idle, it is invested. So for example, if you look at it through an example, so for example, that you are at this point looking at an income source that's going to continue for the next 12 months. So what would one naturally want to do is also start saving something out of those 12 months so that you have money for the 13th month when that income is not going to come. But when you invest, then what that means is that you actually also have income for the 14th and the 15th month, because that investment will grow. So yes, so in a nutshell, what the saving will do is probably feed you in the 13th month. If you invested, that could feed you in the 14th and 15th month. Now, if I look at this example, you'll say, okay, that's very small. That doesn't really move the needle for me, or that's really not a defining thing. But that's not how career and lifetime saving works, right? Now multiply this example to 10 years, 15 years, 20 years, which is your career. So while you are having an active income, it's also necessary that not only you save for the future, but invest it. Now, if I just multiply that example by 10, you work for 10 years, saving will probably save you money for the 11th year. Investing could save you money for the 12th, 13th, 14th, 15th year. So which is why it's important that you don't let your money rest. So another way we explain this usually is that, when you are building your future, there are two people working towards it. One is you, who's working the extra long hours, working on weekends, and the other is your money. When you do saving, what you're saying is, my friend, money, you rest, I'll still go and work. But the best way to do it is that once that money starts coming in, you say, okay, I'm working, you work harder for me. So that's really the difference, that you need to make sure that you're not just saving, you're definitely investing as well.
And in Pakistan's context, how does inflation erode savings and devaluation, as we've seen over the last many decades?
So it's probably true for every economy. In Pakistan, it becomes more imperative because our inflation can be higher than some of the other economies that we usually see. So I mean, again, the classic example that, again, if I say about the 13th month, that I gave you the example that if you just save with the mindset, okay, today my expense is 10,000, in the 13th month, let me save 10,000. The point is, in the 13th month, your grocery bill is not going to be 10,000. Inflation would have come in, it can be 8%, 10%, in some years it can even be higher. So you need to keep investing so that you can beat inflation. So goal should always be that I need to keep an eye on what the inflation is. And that inflation can be of your grocery bill, of anything that you're targeting. So if you're planning to spend an amount in a certain date in the future, you need to keep an eye on what that price would have inflated to. And that's what your goal should be, that my savings should at least be that much and ideally be greater than that.
Okay, and at a national level, how does channeling savings into investments help GDP or the overall economy?
So when you look at investment, let's just break it down to what can be the forms of investment, right? So one is that you lend money to the government via Sukuks, and the people who work in conventional markets can talk about T-bills and PIBs and stuff. And secondly, you do with private sector. So either you subscribe to a Sukuk from a private entity, or you buy their shares and subscribe to their equity. In all of this, you are turning your retail savings into productive investment for the person who's borrowing from you. So even if I take the private sector example, so if a cement company will come and borrow from you or make you invest in their equity, that will go towards an expansion. That expansion will create jobs. That job will create income of the people who just got employed. And if they follow the same mantra, then the money multiplier just keeps growing. So it's just, that's literally the only way that you can keep growing your economy, is that you keep saving. you keep investing and putting it back into productive use.
And in your case, what role do asset management companies play in this entire chain of investments?
So I think asset management companies are important to put a method to the madness. Like, for example, in Pakistan, if you look at people saving and investing, I mean, I don't know if even I should call it investing, but for example, a lot of household wealth goes into, let's say, committees. Now that's really not helping you fight inflation. In cases you're also running credit risk. This happens that you put money into a committee, by the time your time comes in month 10, the guy who was collecting the committee just disappears. So what this does is that gives a complete structure to your whole saving cycle, right? That you're not just putting in 10,000 every month so that after 10 months you can get back 100,000. That's really not protected you against inflation. That's literally done nothing. You would have kept that money at home. Yeah. So this asset management companies, what they do is try to explain to them how their wealth can grow over time, how they can fight inflation, how they can avoid this credit risk episodes that happen in the informal economy. So it's more about putting a structure to it and helping them build a better secure future.
Yeah, you could also say that housewives who use this method need to shift from an informal way to invest to a formalized documented way to invest, where they can actually beat inflation and actually make money out of it.
That's the point. If you have that strong a social circle of your friends, 10 housewives have that strong a social circle, sit down, discuss that, if we all invest this money, we'll all have more money at the end of month 10 than we have through this structure. So it's really that, that journey that obviously as an economy it takes time. Every economy takes time. Ours takes a little longer because we are more entrenched in our ways. But I think that's the natural progression.
Sure. And now delving into Sharia-compliant investment, which is your forte. Why Sharia-compliant investing and how does it differ from conventional investing overall?
So you see, with Sharia compliance, what you're really aiming at, if I talk about stock market, obviously you're trying to not be part of any business that's socially irresponsible. So whether it's gambling, whether it's alcohol, whether it's interest-based banking, you're trying to avoid all of those businesses. Secondly, what you're doing is you're also trying to avoid businesses that are excessively exposed to these kind of ills. So what you're trying to do is trying to deliver people an income that's, free of all the things that have been prohibited in religion, whether it's interest, whether it's gharar, whether it's speculation. So try to eliminate all of that and try to deliver something that's more in line with the Islamic principles.
Sure. And what are the core principles, which define your investment style? And also there's a perception that Sharia-compliant investment gives lower returns as compared to conventional investment. Is that true in Pakistan sense?
So I don't think that's true for equity. I can definitely tell you because the data does depict that if you look at the KMI 30, which was introduced as a benchmark to calculate returns of Sharia-compliant stocks, it came around in 2008, 2009. So you're talking about 17-year history. If you look at that 17-year history, in 10 years, KMI 30 has actually outperformed KC 100. So it's not necessarily true in all cases. In some cases, it might be true where the market pricing is such that you might make a slightly lower return by being Sharia compliant, but that's one of the things that we are focusing a lot on, that Sharia compliance should not come with a cost. It should be very competitive to the rest of the market, and as I said, the KMI 30 kind of has the data that backs it, that this is actually a misnomer. That if you invest Sharia compliant, you will miss out on certain returns.
And in a volatile market like Pakistan, and if the market is leveraged, does Sharia compliant investments help in the long run?
Yeah, absolutely. And I think it was also kind of proven in the 2008 financial crisis where people kind of even internationally started appreciating that, Islamic finance had some inbuilt circuit breakers, so that, inherently it discourages investing in a company that's too much exposed to speculation, that's too much exposed to leverage. So it has some inbuilt circuit breakers that help you protect you from those economic downturn, and that's why it makes you a more robust portfolio if you follow the Sharia principles.
And how do you, for example, do you also screen companies on basis of any ethics as well? Let's say it complies on all the principles of Sharia compliant in terms of its balance sheet, leverage, and overall business model as well. But what about the management? Are they ethically sound, or there are no non-ethical business practices going along within the company in terms of its transactions? Is there something which you also look at?
Yeah, definitely. I mean, that's maybe part of, I would go to the extent of saying that's probably part of every fund manager's filter screen, that you will not want to partner with a business that is falling short on basic ethics of business, or basic norms and principles. So that's definitely a very big criteria, and you're someone who's been involved in the market for a number of years, and even the PE multiples at what valuation those companies trade, there's a stark difference. The market over time, even if it gets initially excited by your maverick ways, it will eventually come back and penalize you. That the way you were doing business was not sustainable. I would rather go with someone who maybe looks prima facie more boring, but is doing business in the right way. So I think that's also a time-proven principle. It can last for a short time, that you can do funky stuff and get away with it, but eventually market rewards quality and integrity.
Yeah, that's interesting. And just generally, many investors or people in Pakistan think that Sharia investing is only about equities. Can you throw some light in terms of what is Sharia-compliant fixed income or money market or Islamic money market funds?
So I think that was probably a concept maybe a couple of decades ago, but now if you look at even the asset management industry, I think people have generally understood that there are fixed income products. There are a number of fixed income products now that are in the Sharia compliant space. In fact, a number that we really quote very proudly is that if you look at the banking sector in Pakistan, banking deposits as a Sharia banking deposits as a percentage of total deposits is somewhere between the 23, 24, 25% mark. If you look at the asset management industry of Pakistan, the Sharia compliant assets are now 45 to 50%. So that realization has not only kind of gone into the system, you see it in the numbers as well. People do realize, and a big chunk of the Pakistan asset management industry is fixed income. So 85% odd of the market, or between 80 to 85% would be in fixed income instruments, and as I said, within the industry 50% is Sharia compliant. So that realization has gone in. Yes, overall offtake of financial products in Pakistan is not at the level it should be, but of the people that were involved in the financial system, I think they now properly understand what are the products that are available and how you can also have fixed income products under the Sharia umbrella.
And what are the different types of fixed income products that you have or you invest in generally?
So for us, obviously, it would be the family of funds that we have: money market funds, we have fixed term funds, we have income funds, we have things that are a combination between equity and fixed income. But generally, if you talk about the underlying assets, then obviously there are a number of ways that you can take exposure. But the one thing that was defining for the sector in the industry was the fact that the government of Pakistan introduced these 1-year sukuk papers. That was something that really opened up the short end of the curve to a certain extent. Similarly, over the longer tenor, they have floating sukuks for 3, 5 and 10 years, which is basically the rate changes as the borrows or the interest rate changes. And they also have the fixed term papers for the same duration. I think a very interesting and a very encouraging development on which work is happening is to bring even shorter tenor sukuks to really be able to compete with the conventional fixed income market, which has those 3-month, 6-month papers. So from what we understand, a lot of work is being done on a 6-month paper. I think once that is introduced, that will probably you will see the mix of Islamic assets growing even more.
Sure. And for that you need a really good balance of asset to liability match as well, which has been a case with Islamic funds over the years, where they could not get the liabilities to match the investments, right? So how has that panned out over the years? And you talked about sukuks as well. So how do these sukuks generate income without any interest, or in Islamic perspective?
So the basic principle is the same, that it's asset backed. So whatever sukuk comes in has an underlying asset at the back of it, and the income that you are getting is a form of a rent or some charge that is implemented on it. So yes, it is very important that it is asset backed. And what the government has also done is realizing the potential of this space. They've also been trying to come up and free up more and more assets that can be utilized to issue more sukuks now. So it's both. It's a demand and supply thing. I think, as I said, it just proves you the number of assets that you have Islamic right now in the asset management space is a very clear signal to even the policymakers that the demand for Islamic is huge. It's just about having the supply available at a competitive price, and I think they're working on that.
And do you have any specific Islamic products for retirees or pensioners?
Oh, we are, alhamdulillah, the largest pension fund player in Pakistan. So we have the full set of solutions available for our pensioners or people who want to save for retirement. So you have an equity fund under the pension umbrella, you have a debt fund, you have a money market fund, and you also have a gold fund, which is one of our key unique offerings. We were the first ones that were able to come out and convert gold into a fund-based structure, so that people could get exposure to gold in small ticket sizes as well. So as far as our retirement product offering is concerned, so we have almost 45% of the Islamic market, 30% plus of the overall market, and that's also a very interesting variable. You see, when I say the overall industry, almost 45 to 50% is Islamic. In pension market, it's even larger. Okay. So that kind of also shows that people want to, at the end of the day, that belief is still there, that you want to invest Islamic. One of the most interesting anecdotes that we quote internally is that we have pension fund account of 2 or 3 CEOs of commercial banks. Okay. of conventional banks. And we kind of asked them, this is, so there also was, that's different, and this is my own saving, or marna to hai, that concept, right? So the Islamic demand is very, very strong. So I think that also shows in our retirement products as well, and I think that awareness, that understanding, and the benefit of investing for your retirement is kind of growing. And I will repeat, maybe I'm extended this answer, but it's important that in a market like Pakistan that you do plan for your own retirement, because we do not have the kind of social security structure that will pay for your expenses when you are past 60 or 65. Unfortunately, even as the social trends are changing, maybe the kids won't also be bearing the expenses of parents like they used to do 5-10 years ago. So all of those changing trends kind of makes it imperative that every person does save themselves for their retirement. You have to plan for your retirement yourself. So one of the things, because we are Sharia compliant, so obviously all of the gold offerings are physical gold backed. We don't trade in future contracts, so we don't have a structure where somebody is paying us the difference for price movement. We actually have physical gold, which is held by the PMX under custodial arrangements. CDC is involved in that. So we actually own the physical gold that we are offering against it. And yes, you rightly said that that's the easiest bit for investors, right? One is that if you have 5,000 rupees and you go into a gold shop right now, maybe he won't even let you come in, let alone deal with you that, okay, why will I give you gold exposure for 5,000 rupees? The fund gives you that. It gives you exposure and PKR terms, right? So in a way, you're also getting a devaluation hedge. Whenever gold moves, you're getting that security, that ease. You don't have to go anywhere. You just trade it online. You subscribe to it. Whenever you want to redeem, you can redeem it. So it makes that gold exposure infinitely easier compared to what someone has to do if they go and take direct gold exposure.
Yeah, for someone just starting new, investing into gold, the ticket size is huge.
Absolutely. Like a 1 gram coin of gold costs anywhere between 35,000-40,000 at this point. For you to be able to get exposure to that at 5,000, also exit. So one is that first you have to save 35,000 to get 1 gram gold exposure, and then when you go to sell it, that's a process itself. Here you don't have to wait. Like if you're getting 5,000 a month saving and you want gold exposure, you'll have to wait for 7 months before you start your gold exposure. Here in the first month you can start getting the exposure. So you're getting return on that 5,000 while you save the next 5,000, while you save the 5,000 after that. So by the time you reach 35,000, if gold keeps doing well, your investment is already 45,000.
Okay, and from a regional context, I'm sure other countries in the region would have some of these gold funds as well. And you mentioned, in terms of ease of buying and selling as well. I'm talking more about this because recently gold is the talk of the town, and I think overall women who save a lot of their wealth in gold here. So, how would you try to convince them in terms of getting into this product rather than getting into informal channels of buying and selling gold?
So I think it's just like any other financial product. It's like just how you would convince the same masses to not go into informal channels of saving, not waste your purchasing power by going into committees and come and do some productive investment. Instead, I think this is the same channel. There are certain cultural biases that will not go away overnight. People will not just suddenly one day say, okay, Meezan came out with a gold fund, let's just stop investing in gold coins and I'll go and start investing in a fund-based product. So I think it's a journey. It's growing, which is why our the kind of uptake we've taken. At times it happens that there's no supply of the gold for us to be able to meet the demand of investors. So it's definitely growing, but yes, it's a process. It's not going to happen overnight.
Sure. Now coming to PSX, which has done remarkably well over the last couple of years. So in your view, how would you describe PSX current environment in simple, non-technical terms?
So I think the first thing that I always talk to investors about is that let's not talk about 2 years, because that kind of distorts the canvas. You have to look at the PSX, you should look at it from a 9-year angle, or a 7-year angle. Start from 2017. So if you look at 2017, December, the market was 40,000. If you look at June 2023, the market was still 40,000. Now that's a very long time period. That literally had a big drag on the asset class, that the PSX index just kept hovering at the 40,000 level. There were 2 blips. One happened due to COVID, and one happened when we were thinking about not signing the IMF and trying to do alternate arrangements. Those were the 2 times that the market dipped to 28,000. There might have been a couple of days when it went to 45,000, but literally if you look at the market, it's a straight line. After those 7.5 years, what you had is from 2023 June to 2025 December or January, where we're sitting right now, that's where the market has gone up 4.5 times. So one way to look at it is that it's gone up 4.5 times in 2 years. That sounds like, okay, that's crazy. But if you look at it, that from 2017 December 40,000 to 2025 December 175,000, that sounds pretty normal, right? That's what an emerging / developing market like Pakistan should deliver. 15-20,000 points a year is not that huge. But because we had that big drag, and again, not to make it too technical, but just things like price to earnings ratio, that what a company is trading for every rupee of earning that it makes. And on average, we've always traded at 8 times. So that if a company makes 10 rupees per share, the average is that it trades at 80. When the times are bad, it comes down to 50. When the times were crazy or we were overexcited, we would take it to 120. But that used to be the band, that if it's gone to 50, then it's cheap. It's 80, it's average. 120, okay, it's getting heavy, so let's do something else. It went to 20. In 2023 June, the economic concerns were so huge that it just went down to 20. Now that pullback was due. So if I look at the market right now, I think it's done a lot of catch up as well. So that catch up has also happened, and now you see people talking about that, okay, the P is now 8 or 9, which is closer to the long term average. So that too was an anomaly. The catch up makes the last 2 years look like an anomaly, which it is not, I think.
Sure. And as we are recording this, KC 100 index and the KMI index just made a record high, and we are at 180,000 points right now. But if you discuss or ask any commenter, there's a comment that is the stock market really showing the true signs or the true picture of the economy? How would you respond to that?
So I would say yes, it is, because that consolidation that was not happening for the last 5-6 years, we were not really on. People are not clear what the economic plan is. I think for the last 2 years that clarity has come in, which is why the mean, the P has now pulled to the mean. It's come back to the average. So as I said, if you take a 7-8 year view, you will see, okay, the market has now come back to the average. Is this reflection of the right valuation? I think that will depend on what we do on the economic front from here on. So we've stabilized the economy, and the PE has come to the average level that it used to be. From here, growth is something that the market is hoping to see, but responsible growth. So if we again start doing things that are not really backed by a plan, then you will see that the market might have some problems. But if you keep exhibiting, like you have reforms, like we had the PIA bidding, I know, we haven't heard a privatization in the last 20 years. So that's huge, right? That is actually a reform where you can say, okay, because the market is doing well, because actual reforms are happening. So that's good. But is it sufficient? No. You'll have to keep continuing. You'll have to show more stuff on the fiscal front. And if that continues, I think we will continue to see multiples re-rate and earnings growth also take this forward.
Okay. So do you think that the current government is, its economic plans are good enough for the stock market to have a sustainable run in the next few years as well?
So they've really executed phase 1 well, which was really stabilizing the economy, which comes with the compromise on growth. So they've slowed it down, they've stabilized it, they've controlled inflation, they've been able to bring down the interest rate. So all of that has been done quite well. Now phase 2 is where the jury is still out, that yes, they want to go towards growth. You see the initial signs, import bill is growing slightly. They passed on all the retail fuel benefit. They also lowered interest rates by 50 basis points in the December monetary policy. So you can see that growth ambition is showing. Now how strong a plan is behind it is really going to be the litmus test. When I look at September numbers, September 2025, which is the last data, the State Bank was able to mop up $1 billion from the market. So that shows that, okay, the pressures are not growing that much. The day I see that, okay, to control the dollar, they were actually supplying the dollars back into the market, that would probably be a red flag.
Sure.
But those red flags haven't come out as yet, so people are still comfortable.
In Pakistan's context, the economy is largely dependent on oil imports. And recently we've had an event over the weekend where the US went into Venezuela, and that might have an impact on the oil prices going forward. So what's your outlook for the oil prices and how it might impact the economy this year or probably going forward as well?
So one of the challenges right now, speaking on economy or even the market, as you mentioned initially, that the market has gone to 180,000. While we were recording, it's gone to 183,000. So that's the kind of moves that are happening in the market. Similarly for oil, I mean, you go on a certain day, you go back home and you think, okay, oil is going in a certain direction, and such huge geopolitical events happen in the bat of an eyelid that it becomes really, it becomes a challenge. So yes, a big event has happened over the weekend. I think the oil markets also still undecided how to look at it. But having said that, I think for Pakistan, it's a pretty straightforward equation. The lower oil prices remain, the more import relief you get, because 70-80% of our oil needs are met through imports. So it's very good for us that oil remains on the lower end of the curve, that geopolitics does not blow up to the extent that oil prices start going up. So I think it's going to be very important. And that's generally we've seen that, and even it grows even for international investors. That cycle keeps growing, right? Okay, oil is soft, oil is such an important commodity, let me look for oil importers who is going to benefit on the margin. So that's the kind of scenario that plays well for Pakistan. It also comes up on the radar of international investors, that okay, who are the oil importers? So while they'll be like, okay, whoever is resource rich, their revenues are going to go down, but the buyers obviously are going to benefit due to lower oil prices, right? So I think it's, for us, it's a one-way street. The lower the oil prices, the better for us.
So there's Pakistan companies are generally perceived to be import dependent, and that has an impact on their financials events. The country faces devaluation and the overall inflation. How have the companies overall fared in the last few years, which has made the stock prices go up? Have they done more localization, or what have they done special in terms to get these high rated multiples?
So I think what has really happened is that if you look at the multiples cycle, so that 6-7 year period that I talked about where the market was literally doing nothing, earnings were still growing. So if you look at between 2017 and 2022-23, earnings have grown by 2.5 times.
Okay.
So it's never been a case that the corporates weren't doing well. It's just that the valuation that was being given to them was low because confidence of the investors was very low. But I'll quote to you something that one of the international investors once told me who visited Pakistan. He said, your companies are battle hardened. They know how to make money in different cycles because you have an economic crisis coming every 3-5 years and your corporates have become used to it. At times we see your companies making money because of the policies, but at times you also see them making money despite the policies. And that's really, I think, one of the strengths of Pakistani companies, that the corporate profitability has generally remained strong through cycles, which is why we always say that if you remain invested in the stock market, you will always make that earnings growth plus dividend yield return, which is a normalized return that should be there. The alpha returns comes from multiple re-rating, which is related to a number of economic variables. But as far as the corporate Pakistan profitability and performance is concerned, I think it's been fairly strong.
Sure. So overall, usually Pakistan is considered, or Pakistan is taken into context that Pakistan has a battle-hardened army. So now we can say that Pakistan also has battle-hardened corporate companies as well.
The numbers prove it. You regress any of the macro variables with corporate profitability, you will see that these guys know how to do their business, a majority of them. And I think that's absolutely true. And as I said, this is a comment from a number of international investors that I've hosted over the years, that they go back thoroughly impressed by our corporate management quality.
Interesting. And just generally as well, speaking of returns and asset classes as well, in Pakistan, if you talk to anyone, in what to invest, the general or the first comment that you hear is that, real estate, or, buy this particular land or apartment, or, or a file now specifically. So how do you compare stock market returns versus real estate, and why should general investor prefer to go toward the stock market rather than real estate?
So you see, every asset has its own merit and demerit. So it's not that real estate itself is a bad asset class. Yes, it's got its own characteristics, but really when you buy into a raw piece of land, so there is a certain cash flow characteristic that you're investing into, that you're just betting on the price of that land going up. You compare it to a stock market, yes, you are probably taking the same kind of a view, but here you also have interim cash flows coming in. You have transparency. You can see the price of your holding every day, whether it's a bond, a sukuk, or a stock, listed stock. You can see the price every day. And the best part, I think, that it offers is piecemeal liquidity, right? So if I own a piece of land, I cannot sell off like 1/10 of that land and raise the money, right? It's generally you have to sell the whole thing. You get the money in 3 months, 6 months, whatever happens. The deal won't happen instantly. In capital market, what you have it irrespective of your requirement. You can just basically very easily sell that and realize the money in a day or two. So I think those are the differentiating factors. So I wouldn't say one is better than the other or which one. Every asset has its own importance. Everybody has importance attached to it. There's a big element of behavioral finance, especially when you talk about real estate in Pakistan. There's this just long-term cultural association with holding a piece of land. So again, it might be fine to a certain extent. Having all your wealth into an illiquid, non-cashable asset, that also is not advisable. And
just generally, there are a lot of scams which go on real estate, which we hear about every single day. But one thing, for a common investor investing in mutual funds like you, is that they get that filtered part where you are able to do the due diligence, and although the market is volatile, share price go up and down, but you're not getting scammed 100% out of your money, or the investor or the companies don't run away generally because you are at at the start or at the gate, doing the basic due diligence out there.
And there is the trustee structure as well, right? So even if you talk about, okay, then who's looking after the asset managers? So trustee is looking after the asset managers. Any rupee that you give to an asset management actually goes to the trustee. Any asset that I buy of your money, whether it's debt, equity, real estate, private equity, whatever I do, it comes vetted by the trustee that, okay, this is fine, this is in line with the constitutive documents, you are allowed to buy this, you're buying this, now I'll release the money. When I sell something, the money goes to them. So I think, yes, the formal economy obviously has all of these safeguards. You're not taking credit risk that you're taking in, going into obscure kind of real estate schemes that you're taking when you're going into committees in the neighborhood setup. It doesn't go in when somebody comes to you and says that, I invest in a certain business, give me money, I'll give you 3% per month return. This is also a very, attractive regime for a lot of people. But then when you hear the disasters in that scheme, then you realize that, okay, it's better that you go for something that's more formalized, has got enough circuit breakers and enough safety walls in it.
Sure. And for overseas investors as well, with stock market being completely documented or fixed income as well, I think it gives them that protection as well, where they can be assured that there is a regulator out there, everything is documented, and the taxation regime is also pretty transparent.
And a lot of the taxation happens at the withholding level, so you don't really have to worry about it. You get all of your tax calculations delivered to you. Through the digital means, you can keep tracking your investment on a real-time basis. You can get your prices every day. You can get the status of your investment whenever you want. You can withdraw whenever you want. So I think, yes, it is definitely superior than, especially when someone's sitting far away. Yes, I have a great piece of land, but who's watching after it? Is it, what's happening in the neighborhood? Is the value going up, down? It's more cumbersome. Mutual funds give you that access. For any asset that you take direct exposure to, you have to invest time, energy, expertise. If you have time, energy, expertise, by all means do these things directly. But if your day job is something else, if you're not the expert, then just outsource it to someone who's doing this for you. It's like so I always draw this parallel, maybe not the best parallel, and my teams don't appreciate this, that why do you give this parallel, but I say it's very simple, right? That if I bring a light bulb home, if I bring a water tap home, do I know how to fix it? I should fix it myself. If I don't, then I should not mess with the tap itself. I should call in a expert for it, which is a plumber who will come in and he'll fit it for you. It's the same concept, but it's just that in Pakistan there is so much silo thinking that you suddenly say, okay, I'll play with my own money. Why?
You guys come in.
And any professional fund manager comes in. Any professional fund manager, anyone who's an investment advisor, an expert. So I'm not saying just talking about asset managers. I'm saying that just give it to someone who understands this. Money is very precious. You really worked hard to earn it. Don't just play around with it. As you mentioned now, culturally we go for real estate and stuff. It's just that we have to come out of the silo kind of mentality as soon as it comes to investment, especially capital market investors, whether it's the stock market or mutual fund. It just seems that people start thinking in a very different way. So as you said, right, real estate scams happen. If somebody in your family gets scammed out of real estate, right, you will say that they were stupid to pick the wrong real estate scheme. Real estate is great. If one person will go and buy a stupid stock, which he should not have bought at the wrong time, he'll do all the wrong kind of things and make a loss in the stock market. You, your family, your kids, everybody will just say stock market is a bad place. Now, there is really no economic explanation for this. Here's a bad investment. The prognosis there came out that he invested in the wrong real estate scheme. Bad investment in stocks. The prognosis is that the stock market is a bad place.
Everywhere.
So it's just that it's also an evolution phase, right? Sure. Eventually we'll come out of this and start seeing asset to asset comparison. Here it's very different. Real estate is a different asset. Stock is a very different asset. Gold is a very, very different asset. And so we've got very different definitions for every kind of asset in Pakistan.
But generally people need to be diversified. So, if they are invested in real estate, then, stock market is also not a bad idea, just for the diversification and protection purposes as well. That if one asset class goes down, the other one, can give you that return as well, with dividend in the stock market as well.
The first step to that is taking a step back and realizing that everything that we're talking about are assets.
Okay.
Here we have a very different measuring scale for all of these assets. So the first point is realizing that all of this makes my portfolio. The house I stay in, I've already got real estate exposure, right? The car I drive, that's an exposure that I have. Start thinking in assets. The gold that I have at home, maybe even if it's for the daughter's wedding, that's an asset. We just think about, okay, this gold is to side pe kar. This will not be counted in the asset calculation. House not counted.
But it's out there. It's part of your wealth, so it needs to be managed.
Your own balance sheet. People don't understand them. So first thing will be, okay, I have my own house. So that's not the asset. Now I have 100 rupees to invest. So first thing I'll do is real estate. Now if you look at it, your total exposure level, you realize you become 70% real estate without even consciously realizing they have to become 70% real estate. So that is something that we need to do, take a step back, understand everything is an asset. Don't stop these silo thinkings that this asset is asset definition A, this asset is asset definition B. All should, once we line everything in one line, I think a lot of the issues will be resolved in terms of personal financial planning.
And do you see that Pakistanis are showing that kind of a shift in terms where they are looking for diversification and overall new kind of investment, not new kind, but getting into the stock market, because generally it was felt that stock market is for the elite and, you know, mostly investors who have big pockets are into the market. Do you see that cultural shift happening?
So it's very difficult to comment on that right now, because right now what is happening, return is also attracting a lot of people, right? Okay. What the real transition will be, people realize that this is an asset class that I want an exposure to through cycles. So if you just come here because you heard someone made a lot of money in the stock market, there's the wrong kind of ambition to come in the stock market, and that will result in something that you will do stuff that you're not supposed to do. Okay. You'll end up leveraging yourself, you'll start chasing returns. So yes, stock market investment is growing, you see the UIN numbers are growing, you look at assets under management. I mean, Meezan is now managing, out of the 700 billion that we manage, 120 billion plus is equities, okay, which is a good number, which is the highest that Meezan in absolute terms has managed over the years. So
market has grown as well.
So market has grown as well, and you know that awareness is also growing. But the real litmus test will be where people realize that, okay, when the returns are more normalized, you still stay in the market, or you say, oh, that excitement is still not there, so I'll now go and look for the next gold pot. So that is a problem.
Sure. Now coming back to the market and your outlook for this year, how do you see the stock market performing after, you know, 2 amazing years? Do you see returns stabilizing in 2026, or do you see, you know, we might have a year where, you know, the prices might not, or the stocks might not go up that well, or we could have a correction as well?
So I'm not, I don't see a problem with the normalized return. I think still it's placed to be in a position where it should be able to give you better returns than other asset classes, because as I said, the earnings growth and the dividend yield itself are a kind of built in terms of taking the stock prices higher. What is under discussion right now is whether it will re-rate further and how much and how quickly. I think that will depend on what macro decisions we take over the next few months. PIO is a great decision. Rising import bill needs, I need to see what is behind that rising import bill. Do you have the buffers? So that will be like, okay, so now they're going towards growth and they have a plan. So that will kind of add up the equation, and that's where you will be more comfortable in seeing multiples also continue to re-rate. But otherwise, even in terms of normalized return, I think the corporate profitability is strong enough for equities to be one of the preferred asset classes going into 2026 as well.
Yeah, because the economy gets stutters once the import bill starts rising, and that's where all of the analysts start looking at first, right? It's the import bill rising, and then we get into that cycle again and again that we've seen over the past many years.
So just to take it away from import bill, let's just take it one step higher and say external account. Okay. The inflow of dollars and outflow. If you have enough dollars coming in and you want to import with that and give growth to your economy, by all means. But if you don't have the dollars arranged and you try to give impetus to the economy, that's where the problem starts to happen.
And as a CEO of an asset management company who's managing such a big amount of money, you know, what confidence you have in Pakistan's long-term investment story?
I think Pakistan investment journey has just started. I mean, even if you look at the retail level, people are still not investing. It's, you know, the investment and savings rate is what, low single digits or low double digits, 12, 13, 14%. Even regional countries are like 25%. Also, the investment space has a lot to do. The country has a lot to do with this kind of demographics. I mean, if we use this properly, domestic demand is like going to be a major theme for the next many years. You just look at it, even today in Pakistan, you said one should do business because there are so many customers for every product that's out there. That's exactly what the stock market is, right? That you have a lot of companies that are catering to exactly this. They are letting you become a partner in their huge empire for 5,000 rupees or even for 1,000 rupees. So why not take that opportunity and invest? And I think that realization is coming in. Now people are slowly and gradually trying to understand that the stock market is not a game of throwing darts, that you threw the jackpot and I threw it wrong. It's about becoming partner with the right kind of people.
It's not a one-time get rich.
and you're becoming partners with these tycoons, right? Yeah. Why not? So why wouldn't you want to do it? Yes, there will be valuations, there will be cycles up and down. But if I tell you that, you know, Hussain Dawood, Muhammad Ali Tabba, Manshah Saab is willing to make you a partner for the next 30 years. Yeah, that's a good proposition. The minute I change the question and say, oh, do you want to buy the shares? And suddenly the mental equation gets distorted and everybody starts thinking in silos. So I think that's an important distinction.
And lastly, if you could give one financial habit or tell one financial habit which each Pakistani or every Pakistani should have, what would be?
Save early, save small, save regularly. Don't really go into that trap that saving and investing is for the rich. Actually invest and save to get rich. And I've seen a lot of those stories where you can see people changing their lifestyle or going to a higher strata of living just because they saved and invested at the right time. So don't think about that this money is too small and it's not going to grow into anything. If you understand how to run Microsoft Excel, if you even don't know, just ask someone to run it for you. That even small amounts of money, how much impact they make over the longer term. Once you see that equation, I don't have to convince you the next time that save regularly, save small, start early.
Sure, that makes sense. Thank you so much, Imtiaz, for coming on the show. And here's to hoping that you have another wonderful year in the stock market and the Pakistan economy keeps on growing.
Thank you so much. Thank you, Bilal.